Hi and welcome to the Market Alert for Friday the 12th of February 2020. So futures grind higher after Powell vows to keep the punch bowl spiked for years, which is something I've spoken about very often. The story really is still US equities first and foremost. Only the Fed can rock the boat, and with yesterday's disappointing inflation print, that prospect has just slipped even further into the future. So yeah, it looks like we continue to see money being pumped into the markets to keep the equities levitating, and that's what we're currently seeing. Yesterday, the implied volatility up again as prices move lower and then were brought back. So there's the option sellers are getting slightly nervous here that this levitation is becoming a bit of a struggle. So it may be a case that we have a correction, but then back to the all-time highs again that we currently see. And we've had this, as you can see in the color-coded one here. And if I just zoom out of here, let me just do that again, so you can see all of these minor corrections here. And then the last one we've had here, all below the 20-bar moving average. And then, of course, the market returning back to the upside. And they're going to keep doing this for as long as they can. News today, we've got GDP prelim. This is month by month forecast at 0.5. I don't know why the previous was 16. Oh, I see, they were playing catch up, weren't they? Following the pandemic. So 0.5 for the last month is what they're saying there. And then what have we got in the US? Anything? We've got the monetary policy, but that's tentative. There's nobody set a time for that as yet. So yeah, not a lot today. Actually, the prelim used to be a medium impact news item, now a low impact as well. Like I said before, they're just not interested in the economic news anymore. And when you can keep spiking the punch bowl, well, there's no need to worry, is there? So let's have a look at yesterday's markets. We'll start off with the DAX. We can see that the market traded up to the 62% retracement there. We'll look at that in more detail in the second part as we take things apart and look at them in more detail. Still weakness here though. The market's making lower highs since we had this high here. We've got a lower high yesterday, and so far today we've got, or overnight, we've got prices there making a lower high, also back below the 50% retracement and below the 5-bar moving average. So we could see prices coming back down to yesterday's low is an option. What I was hoping for here, to be honest with you, was prices to move up to the 89% and then close back below the 89 and the 5-bar moving average for another correction in the market. But at the moment, it seems to have run out of steam on that one. So let's have a look and see why on the overnight, why this is going on. So price is up initially towards the previous day's high. The market failed here and then moved to the downside, and then started to fail at the 20-bar moving average in yesterday's close, then started to fail at the 200 MA and continued to move lower, and still failing here at the moment. And now we've traded down to the DP, where the market's been sitting on this level for most of the night, back to the 200, and as we get closer to the action, we can see that we had the selling coming in here at the 200 MA and then back down to where prices have been sitting on the DP. So the high is up here and quite away from the market, and interestingly enough, this is at the 62% of the daily chart, 14.053 that we saw yesterday, and I marked up in the alert. And a failure to close back above the DP and the 200 MA, we'll see the market move to the downside, and then down here we're going to find yesterday's low, which is going to be 100 points away from the DP there. So a good move to the downside potentially, depending what the futures do first thing. But at the moment, you look at the daily chart, it's looking very weak at this point, and in fact again making another new low overnight there, or early morning here, as it awaits the opening of the futures market. Meanwhile, in the Dow, We've got prices sideways, which you can see more or less a mirror image of yesterday's price action of Wednesday's, and prices also were struggling with that 5-bar moving average as well. So a close below these lows that we've got here. Interestingly enough, yesterday's low is not too far away from Wednesday's low, so either of these in the Dow that are broken are likely to see prices put a lot of pressure on the downside as well. So what I would be inclined to do is to get some fibs on this chart and have a look there, see where we've got 38% is down at the 20-bar moving average if we do get any sort of sell-off. Be a while before you do that. And one other thing you can do is what I call a rolling fib. So I'm going to just remove this for a moment. And what I do is just where the market is parallel to the previous low, what I will do is go to the next low down. So I'll just work my way down to these lows, and until the market comes down to that low, I can use this low up to the recent high, and I can see where we've got these sort of fibs here on the downside, and then just remove the ones that I don't want, and it will give me an indication of where prices are likely to make their way to, and then just make them a bit wider so I can actually see if I get rid of the navigation. There we go, and we can see a bit more there of these numbers. And you can just drag them out, and so you can see them a bit more as well. And you'll see that the 89 is more or less at this low as well. So there'd be major support at this low for the Dow. And then again, if you look at the previous day's lows as well, just move this and you'll find that you'll have a 78% retracement there, which we do. We can just see it here. You can do this on the DAX as well. So in the DAX where we've got the 38, well, we've actually traded down to the 38, so it won't make a lot of difference really. But if we go from this low here, look across to the left, this was the last low. So if I can actually draw from here back up to here, and this will give me target prices that are a bit closer as well. So if I want to know why the market's stopping at Wednesday's low, I can see I've got a confluence of fibs there. And like I say, it's very easy. All I do is look across to the left, and if there is a low that's parallel or support there, then I just move down to the next low, and then until we get to the main swing low and high there, and then draw in the main ones. So yeah, we could leave those in and use those as a way of identifying other areas of support as well. And again, starting off with 38, 50, 62, 62, 38 all come together there, and then 78, and then of course 89 will tie in with the more or less the low of the bar we've drawn it from. Okay, that's a rundown of what we can expect for today. Let's have a quick look at yesterday. The market trading up to the DP level in the futures, but then giving this up immediately, so no interest on the upside there. So let's fast forward through. Again, you can see further the market moving to the downside and just becoming sideways, and then as we kick off, the market trades up or through the DP, but gets hammered each time. I'm going to look in the daily chart straight away to see why this is the case, and we can see we're at 38%, and that's why it's getting hammered. And then prices say, well, okay, look, if we can't go up, then we're going to move to the downside. So they start to shake out to the downside. I've drawn the fibs in. The market went through the 89 from here to here, as you can see there, and then through the 200 MA, and then as it started to come back, you know that it's going to come and have another look at the DP before it moves to the downside. So it's a case of grabbing what you can and then waiting for the market to reverse, except it didn't reverse on this occasion. It just started to trade in a sideways range, and we had a potential buy signal, and this was banging its head against the 78% retracement drawn from this low to this high. And you can also see that we've got a selling pressure bar here as well. So the market, again, as it did in the first part of the session, as it opened, finding resistance at the DP level. And this resistance, again, has to be sold, has to be taken out of the market before prices can move to the upside. So here prices are sent back. I'd already exited this. And there's nothing wrong with doing this if you're reading the market, because you can just lose 3 or 4 points and you can always just re-enter. It's about trading with the flow of what you're actually seeing here. So then we get another potential sell signal. This time it's not filled and we see the market being tested. So we've got a retracement at 50%, the market's gone up, it's come back to 50%, and now they're testing at this level. We've got the green bar in here, and then prices turn around and then move back to the upside once more. Prices get hammered again at the DP level. They try once more, and this goes up to 89% retracement, and again they're hammered once more. So we've got this pattern here of what's going on. They just cannot move. The market wants to move higher, that's evident, but every time it gets to the DP and this BRN, it is getting sold into. There's a lot of sell orders at this point. So once again we attempt to go lower, and what I've done is draw in from the high to the low. I've got all of the fibs in here, and as well as the entry points, etc. And I've got 62 there, 78 is at the scalp, which will take some getting through, and then 89 as well, because I can see by the price action they're trying to move the market to the upside, and this is again confirmed here, because now we've got 80% of the volume that we had in the selling bar in this bar here at the 62% retracement, and 50%, which is removed from the chart, and prices aren't going down. So as we move back through, it's again a case of get out of the trade. We get a buy signal, and having been sideways for so long, it's important now to watch to see, just in case the market starts to show some indication, and it does, because now we're closing above the DP and the volume is lower. So if we're closing above the BRN and the DP, that means that we've got a good chance of moving to the upside, and immediately we run into this resistance here to the left, and then prices show some potential weakness as well here with the up thrust, but then it disappears in the next bar, and then prices are free to move to the upside. So now it's a case of moving the stop to break even and trailing the stop up until we hit resistance here, and again you can see that we've got an increase in volume at this level as well. So as the market starts to come back, it's a case of taking the profits off the table. It trades sideways for a bit, but now you can see we've got an increase in volume, narrower range, so there's still resistance here. I'm watching the 5-bar moving average, and then as prices come back to it, it's a case of getting out. And then the market just trades sideways to lower. I was drawing the fibs on just to get an idea of what's happening. It came back to the 20-bar moving average there, and we see the pickup in volume here and here as it starts to break to the upside, but stuck in a range. It's been a fairly quiet week without too much volatility, which has been reflected in the implied. There we're trading up to the BRN again, that's the resistance, and then through the morning this line here, this purple line or magenta line, is that 053 from the daily chart, the 62% retracement. So I left it on in the morning just to see if the market was going to attempt to move high, and you can see every time it was brought back they kept moving it to the upside. We've got some resistance here, but eventually the market broke through, but failed to hold. You can see the selling coming in there, then back to the BRN, and I'm going to continue forward through this because we got to lunchtime when we got to the jobless claims, which we'll see in just a moment as we get to this area, which is here. So the number of Americans on jobless benefits surges back above 20 million. So it's not going well for Uncle Joe, is it? This is still increasing. So this was bad news. So the market traded down just for a bit. Well, we better make it look like we're not manipulating the markets too much. So the market was brought back, and then prices traded sideways, ready for the afternoon session, which we'll see in just a moment. So here we go. So prices kicked off and they were sideways. We went up towards, again, that 62% retracement. There was too much resistance, and there you can see the 62 there. Prices still hadn't broken it, so let's slam the market down. We've got to get rid of these sellers before we can move to the upside. So they do this, and then they attempt to move to the upside as well. And this fails miserably as well, because we've got some selling coming back in at the same level. And once again, prices trade sideways for a couple of bars, back to the 20 bar, back to 78% from low to high. Find a bit of support there and attempt to move higher again. But inside of here, what I'm doing is looking at the 1 minute, and I can see we've got selling here. You can see we've come down, up, and each time we've got lower highs, which you can see here, here, and here. So when you get this type of resistance, it's likely the market is going to move lower, and in particular when you've got the potential weakness here as well. You can see that we've got more or less selling pressure there as well. So again, you need to shake out before you can move to the upside. And then as we go forward, you'll see that prices do break to the downside, as you'll see there, moving straight down. Let's shake everybody out. There's the selling coming in, and there's the buying coming back into the market. So having moved to the downside, they're now free, as you can see, they're having bought back the market to attempt to bring it back. And what's interesting here is we get a retracement to the 50% with the selling, and now we can actually put in a retracement here. But we don't do that. What we actually do is put in a double bottom, and you can see the market. That's why I drew that line in there. If you go through 89%, you want to see if there's some buying, and there is your buying right in the same place there, and you can see this here, and you've got the 200 MA there as well. So I'm going to fast forward all the way through this, as the market then traded in a very sideways, haphazard sort of way. You can see that we're, you know, from this high to this low, and across here you're about 62-78% retracement. You've got to break through this to get up to these areas here, and prices then hit the 53, and that's it, game over. So it took all day, but the market actually got to the 68% retracement in 62% in the daily chart there, before now finding some weakness. And that's why there is the prospect of prices being able to move to the downside, and why I focus more on that today. Now, whether that happens, of course, is down to the players in the market. I mean, every day so far they've brought the market back. So the short side is going to be short-lived, in my opinion, because again, as it said, the main news today, the punch bowl is still available for stocks. So we'll have to wait and see. And here again, you can see already they're trying to keep it above the DP in order to move it higher. And this is the futures market. It's actually open. I'm a bit late recording this morning, so we're seeing this at the moment. But we'll find out as soon as the cash market opens. But it's looking weakish, that's for certain. Okay, that will do it for this one. Also, just on another note, it's President's Day on Monday, so it's going to be the US are closed, and the European markets will be leading the way. There you go. There's the weakness there being confirmed as prices go through the DP. So, okay, that's it for this one. As ever, thanks for watching. See you in the next.